Hey everybody, just a quick update on the portfolio, which is currently sitting at $32,813. It was trading pretty high and in the green the majority of the day, and even reached its overall peak an hour and 15 minutes before market close, where it sat at $33,408. And then it dipped down, dipped into the red, and closed, as I mentioned, right below 33,000. Looking at the all-time development, we see here that for the day, as mentioned, it's down 1.13%. The week, we're actually up 1.22%. The month, we are up 3.28%. 3 months, we are up 7.29%. And for the year, we are up 6.54%, which I'm definitely not going to be one to complain about since we started here in June, so June 2020. And as we've gone through in some of the other videos, there was quite a dip in the beginning, which definitely threw me off. But as you see here, there's not only been a recovery path, but they've actually seen some solid gains. And as you see here, it's been trading pretty interesting. Obviously, we know that the market is pretty volatile and will go up, down, but we actually have seen quite a few dips throughout the month, if not the last couple of months. One of the bigger ones was here in September. And as you see here, as we go through the graph, it was pretty steadily or gradually going up in August, and then it started becoming super interesting here. And dips obviously will throw majority of the people off, but for anybody that's a long-term investor, we usually see it as a good opportunity to $1 cost average or get into stocks that we may not have in our portfolio yet, but a dip may present a good buying opportunity at a, let's call it, an entry friendly price. So obviously if something is trading on an all-time high and you see a dip, it might be a good opportunity for you to add in. Or similar to myself and my own experience, let's go to at&t here. As you see here, at&t is actually surprisingly one of the stocks that closed out in the green. My average cost is currently, let's see here. My average cost is currently $29.20. I own close to 69 shares. And as you can see here, I could have been buying stocks today and it would actually had, decreased my average cost. But I'm fairly certain there is going to be a dip. So I'm just holding a cash position to buy in, but definitely one of the stocks that I want to keep in my portfolio long term. And with that, any dip that I might see, while it's probably momentarily a loss for me, it's a good opportunity to buy into that dip and make sure that I dollar cost average down. Let's see here, let's jump back to the home page. As I've said in many videos, my stock count, or the amount of positions that I have, is closer to 50, which is something that I probably wouldn't recommend because it might be me over diversifying. It actually might be lower than 50 at the time, but as you see here, I do have shares in a lot of different companies, and I like that it's super diversified, and I'm holding on to some super solid high quality companies here that I do believe in long term. So again, as I mentioned, I'm just gonna keep buying into them, especially when opportunities such as a dip that we saw today and potentially the forthcoming dip, just keep buying into the companies that you want to hold on to long term. And obviously red is going to throw some people off, but again, I think you should think of any red day or any dip as a good buying opportunity for you. So my only suggestion here is to stock up on your buying power. Make sure you deposit whatever you have to deposit into whatever brokerage you have, and just be ready to buy into the dip. One thing I know for sure is that I'm gonna, again, as mentioned, at&t, Coca-Cola, Realty Income, and there's so many different other companies that I want to buy into. AbbVie, J&J, ExxonMobil, which is trading, it's definitely coming to a loss with me, but a company that I want to invest in not only for long term, it's a super good dividend payer, and now is just the time to buy in at a super good cost and make sure that I can dollar cost average down. Um, and let's see here as we scroll through. Google, while not a dividend paying company, a tech company that, it has so many different products, services, resources under its umbrella. So this company is not going anywhere. So again, with a dip, good buying opportunity, dollar cost average. As you see here, I don't even have a share. It's trading pretty high. Let's see here. Yeah, closest to 1500. So I'm not gonna buy a share, that's for sure, but I am gonna keep buying fractional orders so I can increase my market value or the cost that I put into it. As you see here, the diversity or the position it has in my portfolio is also super small. And as we go through the list here, still, there's just a ton of companies that, if a dip arises or if this is just some sort of indicator for the trend to come over the next couple of days, weeks, whatever. We all know that high quality companies, Microsoft, Amazon, Apple, and we could go down the list: Waste Management, Triple M, Pepsi, Intel, General Motors. While you may see a profit right now, again, if there's a dip, I would highly suggest evaluate what are some good positions for you, some good quality stock, and buy into them, because as we saw here, let's just do the 1 month. September 23rd, I had a dip that was, what was this? Let's call it 2.5%. And I know for a fact that as I saw this was going down, I kept buying into companies, and then I knew there was going to be a recovery. You never know when the recovery is going to be, whether it's going to be the day after, a week after, a year, 10 years after. But as you see here, the recovery came pretty fast, and it's just adding on to the overall goal of, one, me increasing my portfolio value, and two, the capital gain that you're actually getting from buying into dips, again, with high quality stock that potentially is going to recover. The recovery is just so much better if you keep buying in and increasing your position, and don't get scared from a dip, because in the end, a dip or a red day just means shopping.